Let's take it closer to home now here in Asia. Peter Churchhouse is head of research at Morgan Stanley. Dean Witter, he joins us for a look at property in Asia, specifically from our studios up in Hong Kong. Peter, good to have you back. It's been a while. We mentioned, analysts are looking at a possible bubble building in the U.S., the U.K., etc. But I mean, as far as Asia is concerned, you've just come out with a report. We're nowhere near that situation yet.
Certainly not. In fact, Asia's property bubble really burst with the financial crisis back in '97 and '98, and we've seen property prices in the region down anything between 30 and 60%. So there's no evidence of any bubbles really building in Asia, perhaps with the exception of China, where in the last 18 months we've seen a massive recovery in the sector in cities such as Shanghai and Beijing. So there's a potential for a bubble building there, but nowhere else do we see that at all in the rest of Asia.
All right, so Shanghai looking hot, perhaps a little too hot, but not quite a bubble yet. Conversely, the other end of the scale here, Japan, I mean, prices have been falling more than a decade now consistently.
That's absolutely right, and we see even further downside risk in Japan, particularly in the commercial markets, maybe not so much in the residential side, but certainly in commercial. In Tokyo, we're seeing a big buildup of supply over the next couple of years at a time when the economy is still pretty weak. So we're expecting further downside risk in rentals in that market, but as far as the residential side is concerned, probably fairly stable, but not really a lot of upside potential either at this stage.
Okay, Peter, in Morgan's view, how do the markets in Singapore and also Hong Kong look? I mean, both those economies, a lot of resources, a lot of money's been diverted into bricks and mortar.
Absolutely. These two markets have been very weak for the last couple of years now. We think we're pretty much at the end of the down cycle in both of these markets. Affordability is extremely strong. We've seen the overhang of supply has been pretty much absorbed. That was yesterday's story. We're now in pretty much an equilibrium in terms of supply and demand and housing, and we're expecting to see a modest uptick as the economies improve in these two markets over the next 12 months or so. We don't expect to see a bubble by any means, but certainly upside, not downside, in residential housing prices over the next 12 months or so.
Peter, bottom line, is it time to start getting into taking a second look at some of the big developers in Hong Kong as well as Singapore?
Well, these stocks have done quite well over the last few months anyway. They've outperformed the market in the last couple of months. We're still very much involved with those stocks, but it may be time to start taking a look at some of the smaller stocks which have actually lagged behind the bigger stocks. And I think that's perhaps where there's some very good value in some of the second liners in both Hong Kong and in Singapore. These stocks are genuinely very cheap right now.
Okay, names in particular you like?
The certain stocks in the second liners we would look at would be companies such as HKR International in Hong Kong, Wing Tai perhaps in Singapore. These are the sorts of stocks that most of the institutions haven't really focused on over the last year or two. They've looked very much at the bigger stocks.
Okay, names noted, second liners. Thank you so much. Peter Churchhouse, Morgan Stanley, Dean Witter from our studios up in Hong Kong.